All right, so venture capital in 2024, huh? Want to know what went down?
Let's dive in.
We're going deep on this one.
Sounds good.
We've got the PitchBook-NVCA Venture Monitor Report. It's basically like the VC Bible.
Oh, yeah. It's the go-to source for anyone who wants to understand what's happening in the VC world.
And we didn't just stop there.
Oh, no.
We also got some juicy insights from, J.B. Morgan,
Mm-hmm.
Denton's
But
lawyer.
whole gang's here.
We're painting the full picture. You ready for this?
Absolutely. Let's do it.
All right, so the Venture Monitor Report. Why is this thing so important?
Well, it's a really unique blend of hard data and qualitative analysis from experts.
Right.
It's not just numbers. It's like, what do those numbers actually mean?
I like that.
So you get this really insightful look at the trends shaping the industry.
Okay, so let's paint that picture then, the overall picture for 2024.
Hmm.
It's a little bit of a puzzle, you know.
Yeah.
We hit $209 billion in deal value, which sounds amazing, right? But it's actually still way below those crazy highs we saw back in 2021.
That's right. Yeah, we're still kind of recovering from that peak.
And then there's the whole exits situation.
Ah, yes.
They're lagging big time, which means
Investors are getting a little,
nervous.
yeah, nervous. Antsy, maybe? Because,
Well, explain that. Why are they so antsy about it?
So fewer exits mean lower returns.
Yeah?
Especially for those limited partners, the LPs.
Those are the big money people, right?
Exactly. The institutions, the individuals who invest in these venture capital funds.
Right.
And when returns are down, they're hesitant to, reinvest.
I see.
So what does that create? A very investor-friendly market.
Oh, interesting. So it's kind of like a buyer's market right now for VCs.
Exactly.
It's almost like the pendulum has swung.
Yeah.
But it's interesting, though, right? Because we're talking about this slightly gloomy picture of exits and LPs being hesitant.
Yeah.
But at the same time, we're seeing these massive deals, especially in AI,
Yeah.
right, driving a lot of the growth.
It's very uneven.
It is.
I mean, if you just look at the headlines, you might think everything's booming.
Yeah.
But when you zoom out and look at, smaller companies or other sectors,
Right.
it's a very different story.
It's like a tale of two cities almost.
Yeah. And it makes you wonder, is this laser focus on AI, is it actually hindering growth in other areas?
That's a good question.
It's something to think about, right? I mean, what if all this talent and resources are being sucked away from, other potentially game-changing sectors?
Okay, well, speaking of AI, let's talk about the elephant in the room, or I guess the 800-pound gorilla.
Right.
It's the undisputed champion of 2024, isn't it?
Oh, yeah.
AI startups took home, what was it, almost half?
A whopping 46.4% of all VC dollars.
That's wild.
It's huge.
I mean, those deals with Databricks and OpenAI.
On XAI, don't forget XAI.
Right, they definitely skew the numbers a little.
Of course, those are mega deals. Yeah.
But even if you take those out of the equation, the investor enthusiasm for AI, it's real.
It's palpable,
Absolutely. It begs the question,
Go on.
is this sustainable? Or are we looking at a bubble that's about to burst?
It's the million-dollar question, isn't it?
Yeah.
Everyone wants to know. And this AI frenzy, it's not just limited to the traditional VC firms, right?
No, not at all.
Corporate venture capital, CVCs, they're piling in too.
They are. And for them, it's not just about chasing those returns, right?
Yeah.
They're looking at it strategically. How can these investments in AI boost our core business?
And let's be honest, AI has the potential to disrupt.
Pretty much every industry.
Yeah, exactly.
It's everywhere.
And there's this really interesting McKinsey report.
Oh, tell me about it.
It talks about this trend of companies increasingly using what they call venture building as a growth strategy. It's not exactly CVC investing, but it's a similar idea.
It's this idea of proactively investing in innovation.
Yeah, to stay ahead of the curve.
It's like they're realizing that, hey, if we don't innovate, we're going to get left behind.
Exactly.
And they're seeing AI as, that golden ticket to the future.
It makes sense.
But here's where things get even more interesting. Remember those crossover investors?
The bridge between the private and public markets.
Exactly. They've basically vanished.
Yeah, they've pulled back significantly, especially at those later stages, where companies need them the most.
It's like they got spooked or something.
Well, there was that Morningstar report that showed that, mutual funds were often losing money on investments in unicorns.
Right.
So maybe they're a little bit more cautious now.
I mean, I get it. Nobody wants to lose money.
Yeah.
But doesn't this create a problem for those later stage companies that need that capital to to grow and scale?
It definitely presents a challenge, but, could it also be an opportunity?
What do you mean?
Well, maybe this absence of crossover investors creates space for, like, strategic acquisitions by larger companies.
Interesting. So it's like one door closes, another one opens.
Exactly.
Okay, so if late-stage equity financing is drying up,
Right.
how are these companies keeping the lights on?
That's where debt comes in.
Ah, venture debt.
Venture debt had a banner year in 2024.
Really?
It hit a record $53.3 billion.
Wow, okay. So who's driving this growth in venture debt?
You guessed it. AI companies. They're using debt to finance their computationally intensive needs,
So it's like they're trading equity for debt.
In a way, yeah. And what's fascinating is that debt is flowing into these later stages where equity is becoming more scarce.
Right.
This could be a sign of things to come, Companies staying private longer, relying more on debt financing.
It's almost like the traditional path to an IPO is losing its appeal.
Yeah, or at least becoming less accessible.
Yeah. But even with that shift, we're still dealing with this big question mark hanging over the industry.
Which
the IPO drought. It's the elephant in the room.
It is.
We're going to dig into that right after this break.
Can't wait. Yeah, exit value in 2024, it stayed way below pre-pandemic levels.
Didn't it?
Primarily because of that lack of IPOs.
Right.
We did see a little bump in M&A activity.
Yeah.
But it was mostly smaller deals.
Okay.
So it all points to this liquidity crunch.
Ah, the liquidity crunch.
That venture capital is facing,
Right.
Investors need those exits.
Of course.
To make their money.
Yeah.
And without those IPOs,
Yeah.
it's a problem.
Big problem.
It is.
So we've got this AI boom happening.
We do.
But IPOs are drying up.
Right.
Exits are scarce.
Yeah.
It sounds like a tough spot for investors.
It's definitely a tricky landscape to navigate.
But maybe there's a glimmer of hope on the horizon with this new administration.
In Washington.
Yeah.
Yeah.
Could that change things?
It certainly could.
Okay.
I mean, the NVCA.
That's the National Venture Capital Association.
Exactly. They've flagged some key policy areas to watch.
Okay, let's break those down.
Let's do it.
So first off, potential changes to tax law.
Yes. Particularly extending the 2017 tax cuts.
Right.
So Denton's pointed out that if those extensions happen, could free up more capital for investment.
Okay, I see.
But the new administration will have to figure out how to pay for it, which could lead to some tough decisions.
Always a trade-off.
Right.
Okay.
Next up, we could see a lighter touch on AI regulation.
Deregulation.
Yeah, which could be huge for those AI startups.
Give them more.
Let them innovate.
Freedom, yeah.
More freely. Right. But, of course, that also raises some concerns.
About?
Potential risks, ethical considerations, right?
Yeah.
So finding that balance between promoting innovation but also safeguarding the public interest.
Right.
That'll be key.
Okay, what else?
Healthcare.
Yeah.
Could see some significant shifts under the new administration.
Right.
The NVCA highlighted that potential for changes in the healthcare priorities, which could have a big impact on investment in health tech, biotech.
We'll see how that shakes out.
Yeah, we'll have to wait and see.
And then there's blockchain.
And crypto.
Yeah, the whole Web3 world.
Right, under this pro-crypto administration.
Right. What are they saying about that?
So Denton's predicts
Okay.
that the SEC, with new leadership, might adopt a more favorable stance towards digital assets.
Okay.
Which could, open the floodgates for investment and innovation in the crypto space.
Interesting. Definitely something to watch.
Absolutely.
Okay, so before we jump into some of the other trends, let's pause for a sec. What's standing out to you so far? What are your initial thoughts on all of this?
Well, it's a mixed bag, isn't it?
It is.
You have this incredible excitement around AI.
Yeah.
But this undercurrent of uncertainty about the future.
Yeah, it's like a push and pull.
It is.
And we can't forget those challenges VCs are facing.
Yeah, right, with fundraising and exits.
Yeah.
It's a tough competitive landscape out there.
Especially for new firms.
Especially for those newer firms trying to break in.
Trying to get a piece of the pie.
Right.
Okay, so speaking of challenges, let's shift gears a little bit.
Okay.
Talk about cybersecurity.
Yes.
It might not be as flashy as AI.
Right.
But as Deloitte emphasized, it's having a growing impact on valuations.
It is.
Investors are realizing that, a company with shaky cybersecurity, it's a risky bet.
It's a huge liability these days.
You know, I was actually talking to a founder recently,
Oh, yeah.
and they told me that a ransomware attack almost completely derailed their IPO.
Wow.
It's crazy.
It really shows you that
Yeah.
cybersecurity isn't just an IT issue anymore.
No.
It's a business critical concern.
It can make or break a company.
Absolutely.
And the threat landscape, it's constantly evolving.
It is. Deloitte's Cyber Threat Trends report highlighted that, these ransomware gangs are getting so sophisticated.
I know. It's like...
They're operating like corporations.
Yeah.
With help desks and customer service.
I know. It's crazy.
It's wild.
They're getting smarter too, right?
Oh, yeah.
About targeting companies during, like, those critical events.
Like IPOs, M&A deals.
When they're most vulnerable.
Exactly. They know.
Yeah.
That's when they can, really capitalize.
It's scary. It's a scary world out there.
It is. It is. So
what can companies do?
Well, they've got to have a robust cybersecurity plan in place.
Okay.
Deloitte suggests adopting this zero trust approach. So it basically means verifying every login, every connection.
Like airport security for your entire network.
Exactly.
I like that.
And it's interesting how AI is playing a dual role here.
Yeah.
It's enabling these more sophisticated attacks, but it's also powering the next generation of cybersecurity tools.
It's like a double-edged sword.
It is. It's a constant game of cat and mouse. But, the positive takeaway is that companies they're prioritizing cybersecurity.
More than ever.
More than ever before.
Good.
And investors they're starting to reward those companies that make security a top priority.
That's good to hear.
Yeah, so this is something really important for anyone who's navigating the world of venture capital.
Yeah.
Whether you're an investor or an entrepreneur, understanding the importance of cybersecurity, it's absolutely critical.
Can't overstate it.
It can make or break a deal.
Absolutely. So, okay, so we've talked about challenges.
We have.
But are there any bright spots emerging?
Well, potentially.
Right.
This change in administration could actually create a more favorable environment for exits.
Wow, okay.
Remember Denton's specifically mentioned?
Yeah.
The potential for deregulation, changes at the FTC, which could really smooth the path for companies
to go public.
Going public or getting acquired.
Okay, so less red tape.
Yeah, potentially.
All right, and what about those record low interest rates?
Oh, right.
We touched on those earlier.
Yeah, as the Fed continues to lower rates.
Yeah.
It could really stimulate more investment activity.
All money flowing.
Yeah, lower borrowing costs could encourage more deal making.
Right, on both sides.
On both sides.
Equity and debt.
Exactly. And if investor confidence starts to rebound, we might just see a resurgence in IPO activity.
Fingers crossed.
Right.
But there are still
a lot of variables.
A lot of variables.
The political landscape, it's in flux. The global economy, it remains unpredictable.
So what does all of this mean?
That's the question, isn't it?
For us, for the listeners.
Just everyone involved in this world.
In the world of venture capital.
Yeah.
Well, it's a time of both uncertainty and opportunity.
It is. It is.
It's a wild ride, that's for sure.
It is.
But hey, that's venture capital for you, right? Always something new happen.
Always keeps you on your toes. Exactly.
But I think it's important not to get so caught up in, the AI hype.
Right.
And miss the bigger picture.
Yeah. There's a whole...
The venture capital landscape is complex.
It is.
There are opportunities beyond the latest trends, right?
Absolutely. I think that the key takeaway here is don't just chase the headlines.
Yeah.
Dig deeper, pay attention to those policy shifts, keep an eye on exit activity.
Right.
Consider the overall economic climate.
It's like it's not enough to just know what's happening. You need to understand
the why. Yeah.
And what it means for you.
Yeah.
Your investments, your business.
Exactly.
And perhaps most importantly, never stop learning.
There you go.
Right.
That's what we're all about here.
Exactly.
So before we wrap up this deep dive, I'm curious, what are your takeaways from all of this? What are you thinking about? What questions are swirling around in your head?
It's a fascinating time to be involved in venture capital.
It is.
That's for sure. It really is.
And while AI is commanding a lot of attention.
Yeah, it's the hot topic.
It is, but remember, the next wave of successful startups, it could very well come from sectors that are currently, flying under the radar.
That's an interesting thought.
Yeah.
You think about the major challenges facing the world today.
Mm-hmm.
Climate change, healthcare disparities, aging populations, food security. I mean, the list goes on and on.
It does. And within those challenges, there lie,
Opportunities.
immense opportunities for innovation.
Right.
I mean, we're already seeing exciting developments in areas like clean energy, biotech, agritech.
Yeah, those are really heating up.
They are. And as those sectors mature,
Yeah.
they could attract even more investment,
Right.
leading to, breakthroughs that could truly change the world.
And even within AI itself, I mean, there are subsectors that haven't really been fully explored yet.
Right.
Like what?
Well, think about AI for good, using AI to address social and environmental issues.
Right. So using it for positive impact.
Exactly. And as investors become more focused on, ESG,
Environmental, social, and governance.
those factors, we could see a surge of capital flowing into these, impact-driven areas.
So it sounds like if you're looking for the next big thing in venture capital, it might be wise to look beyond the current hype.
Yeah.
And consider those sectors that are tackling, the world's most pressing problems.
Right. That's where the real impact, the real innovation
Yeah.
is likely to happen in the coming years.
Well said. Well said.
So,
on that note, I think we've reached the end of our deep dive into the state of venture capital in 2024.
well, that went fast.
It did. It always does.
Time flies when you're having fun.
It really does. But we hope you found this exploration insightful
And informative.
and maybe even a little bit inspiring.
Yeah, I hope so.
And remember, the conversation doesn't end here. Keep exploring, keep learning, keep asking those tough questions.
Exactly. And who knows, maybe someday we'll see you on the other side of the deal table.
That's it for this deep dive,
Thanks for listening.
but the journey continues.
It does.
Happy investing,
Happy innovating.
or just plain learning.